Hey everybody, welcome. Today we're going to look at gold and silver mining and all of the ounces mined throughout history. Okay, so here we're going to take a look at the gold and silver mining industries, not just in any one country, but totally and cumulatively throughout the world. So here's our gold chart. We're starting in December 1799. A lot of things happened around this period. The United States Revolution, the French Revolution. It's kind of the beginning of the modern republics of the world. And we're taking it through today. So right off the bat, you're going to notice a gradually upward sloping curve. This is the supply and therefore the demand of the yellow metal around the world. Let's just go ahead and look at it. In December 1799, there was roughly 300 million ounces of gold produced throughout humanity. And by December of 2022, there is roughly 6.4 billion ounces of gold produced throughout humanity. Now we see it's obviously more gradual here in the 1800s, and it gets steeper here in the 1900s. That's a typical trend of compounding. That's a typical trend of compound annual growth. And I will explain a little bit more what those rates are towards the latter half of this video. But we can see it's a gradual compounding supply curve that doesn't show any sign of slowing down. If we look at the 1800s here, I know this is kind of a US-centric timeline, but we're catching the California gold rush here in the mid-1800s. A lot of people went out west in the United States and Canada to look for gold. We see that we do catch an increase of gold here. You can see the clip is fairly steady, the rate of increase here, and then it does increase after the California gold rush begins. From 1873 until the start of World War I, we were in a very brief period of what we call the International Gold Standard, or the International Classical Gold Standard. Germany went off most of its silver-based currency and started using gold-based currency, as did many Latin American countries, other European countries. The United States had the Coinage Act, where gold became more front and center. The gold standard really took place during this period, and we see that it's a gradual accumulation as well during the late 1800s and early 1900s, but it only lasted for 30, 40 years, basically. Back out again. Here we have when FDR came into office. Almost immediately, very early, he made gold illegal for Americans to hold. The USA Gold Reserve Act was passed. A lot of gold flowed out of European countries and into the United States due to the terrible dictators of Hitler and Stalin and Mussolini in Europe, war-torn Europe. A lot of gold flowed into the United States at this point. But regardless, you can see that gold production actually bumped up a little bit here in the late 1930s and early 1940s. We were about at 1.6 billion ounces of gold here when war was ravaging Europe and Southeast Asia. And then here we go to the next end of a major monetary event, the Bretton Woods Agreement, which started around here at the end of World War II. Only lasted 25 years or so. All the economists in the Western world that put gold and the dollar squarely together, the gold reserve standard, where basically the dollar was the reserve currency for most central banks around the world. And if they wanted to store gold, they stored it in the United States, which had already made its way to the United States, as I just mentioned, during World War II. That all fell apart as well. The Nixon shock, Bretton Woods ended, and Americans could thankfully own gold again, and gold started to trade freely on the market. A lot of economists thought that gold would quickly fall in value, but in fact, we've seen that the gold price has not fallen in value in prior videos, and we see that the demand for gold and the supply of gold to the market has not fallen either. No matter what happened on Silver Thursday when the Hunt brothers tried to corner the market, or Gordon Brown geniusly selling half of the United Kingdom's gold during the commodity bear market bottom at the end of the 1990s, nor at the Eurozone crisis. You've seen the clip of gold has grown pretty steadily. And if we look in kind of this very, very modern era, this is also the start of the fiat era where there is no gold backing any currencies here. If we look at this era just right here, we can see we have 2.6 billion ounces of gold in August 1971, right exactly at the Nixon shock. And today we have about 6.4 billion ounces of gold. So that's a multiple of 2.5x. So the supply of gold, the stock of gold worldwide, has increased by 2.5x in the last 50 some years. And another way we could say that is 60% of all gold throughout humanity, 60% began to be mined right here at the end of 1971 in this modern period. Nearly 2/3 of the world's gold has been mined in the last 50 years. So that's gold. Let's take a look at silver. All right, so silver, the white metal, secondary to gold, always. It's the line here on the chart. And as it's secondary to gold, you might imagine the supply, of course, is much larger than gold. It's less scarce than gold. And we can see, indeed, there are many more ounces that have come out of the ground of silver than gold. So gold's here. Way down here at 6.4 billion ounces. How many ounces of silver have been mined throughout humanity? About 56 billion ounces. 56 billion ounces of silver. Roughly 56 billion ounces of silver have been mined as of December 2022. If you're wondering where I got this data, this wonderful historical data was compiled by an Australian gentleman. His name is Nick Laird. He's written a lot in the gold and silver sectors. Of course, I'm checking things, especially in later years, with industry resources such as the World Gold Council or the Silver Institute. And I make some of my own adjustments as well, but the bulk of the research comes from Nick, and he's done a wonderful job. And it goes well beyond this as well, not just the last 220 years, but and we'll look farther back in the past as well for some of this data. But nonetheless, let's even take gold off, and let's just look at silver here. We can see that it started out with 5.8 billion ounces, so not quite the gold count today, but 5.8 billion ounces of silver we had mined throughout humanity as of the year 1800. And today we've mined 50 more billion ounces, 50 more billion ounces. Again, it's a steady, constant increase you see during World War II as well. Even in spite of World War II, there was more silver coming out of the ground, as there were many commodity products, specifically in the 30s, as Germany and the Soviet Union and Japan were arming themselves with militarily and all the rest, many minerals and commodities. There was a big boom in the 1930s because of that. So we see a pretty constant increase here in the stock of silver. And let's go again to the modern period here, the end of the gold standard in every shape and form, to when we started the fiat era, the Nixon shock, August 1971. We've talked about this in prior videos. How are we looking with silver at that point? Well, 26.5 billion ounces had been mined throughout history up until that point. And by today, again, about 56 billion ounces of silver. So the multiple is roughly double. Roughly double, little over double, 2.1x silver has been mined in the last 50 years. And that means the inverse of that, roughly 50% of all silver has been mined in the last 50 years, as opposed to gold, where it's closer to 60%. 60% of all gold has been mined in the last 50 years. So very similar numbers, very close numbers as far as the production rates go And let's go ahead and let's put gold back on. Let's take a look at some numbers here. I just want to summarize for you. Again, I explained to you that it's exponential growth. How can we tell that? Let's put it on log scale. We don't even need to draw trend lines here. You can see that roughly the trends are turning straight here. They're not completely. If anything, from the gold rush, they seem more straight up the chart, straight lines here on log scale than if you count the early 1800s. But nonetheless, it is exponential growth. It's the growth that most assets and entities in the marketplace, or even in the natural world, population grows exponentially. Many things grow exponentially. We can see that if we put it on log scale. But what is that rate of growth? Well, for gold, the gold stock from about 300 million ounces of gold in December of 1799 to 6.4 billion ounces of gold in December of 2022. That is a compound annual growth rate of 1.4%. 1.4%. What about silver? Well, silver, as you remember, started at 5.8 billion ounces in December 1799. And today, it's about 50 billion ounces more, 56 billion ounces total. What's that compound annual growth rate? 1%. 1% per year. So silver, because it has a larger stock primarily, that's the main reason. It always has a larger base. There are more ounces of silver to work with because they're less scarce than there are with gold. The compound annual growth of silver actually grows a little bit slower than it does for gold. The production rate of silver actually grows a little bit slower than it does for gold. And what do those rates look like in the last 50 years? Remember, I told you that 60% of all gold had been mined in the last 60 years. Well, gold has grown at a rate of 1.8%. We had 2.6 billion ounces roughly in 1971. Now we have 6.4. That's a compound annual growth rate of 1%. What about silver? Well, we had 26.5 roughly billion ounces of silver mined throughout all of humanity. In 1971, now we have 56.1 billion ounces of silver mined, roughly. That's a compound annual growth rate of 1.5%. 1.5%. So the delta there between the all-time, which is lower, and the last 50 years, which is higher, is actually very close for each. It's 0.38% more compounding percentage points for gold, and it's 0.45% more compounding percentage points for silver. So going back to the chart again and just looking at the rate of growth, looking at the curves, we don't even need to draw trend lines here. We don't need to draw percentiles and get complicated. We can see that these metals are pretty tightly correlated. They're pretty tightly related. When one goes up, the other typically does go up as well, as far as mining goes. The only thing I'm not really showing you here that's a major difference is the industrialization rate. And I will work on getting a better curve there. Certainly in the last 100 years, silver has become vastly more industrialized as a use case for the metal than gold. Gold remains primarily today a form of jewelry. About half of gold is in ornamental or jewelry use cases, and the rest is monetary, bullion, coins, and bars. There's a very small percentage of gold, about 15%, that is used for industrial usage. It's used in dentistry and some electronics, so on and so forth. Silver is much higher. The industrialization of silver over the last 100 years, at least, has taken about 50% of these silver ounces outside of the market to where they're really not easily recoverable. I mean, they're definitely produced and used and demanded in the marketplace, but they're not easily recoverable or used or saved as a store of value like most of the gold is. And even the gold jewelry is a store of value. You know, people in China, people in India in particular, gold dowries during weddings, gifts from parents, inheritance, so on and so forth. That is a big part of the gold market, the store of value function. It is much less so for silver. And in fact, about 50% of that number in total is estimated to be not easily recoverable, not easily absorbable. There is silver that is recycled every year back into the marketplace. But again, a lot of that is immediately demanded up and absorbed into industry. So into conduits, into electronics, into many different sorts of use cases. So silver has more of a demand from industry, not used as a store of value. And you can actually take off about half of the cumulative ounces today and assume that they are not easily reabsorbed into the all-time stock of a store of value function. Definitely they're there. They exist in the products that we use and the buildings that we live in. There's a price for them on the margin in the market. Absolutely. Silver is, nothing comes for free here in the market. So there's a price for every marginal ounce of industrial silver for sure. But the store of value use case is not there by a factor of 0.5, basically. Half of the silver can be removed due to industrialization, whereas only about 10 to 15%, closer to 15% of gold is estimated to be absorbed into industry. So let's take log scale off. I don't want to give a major conclusion here to silver bugs today. We will revisit this cumulative ounces mined figure tomorrow, and we will look at it from the perspective of the gold-silver ratio again, but this time not looking at price, but looking at ounces mined, looking at the supply. That's going to tell us some very interesting things about how silver has moved in the past and where it may be moving today. But again, the theme from yesterday is let's poke holes a little bit at the silver bug thesis. Silver bugs typically like to say, because the gold-silver ratio is so high compared to where it historically was from the days of Isaac Newton and Thomas Jefferson, that it's due for a massive correction in the gold-silver price ratio and that the price must explode. Well, as you can probably imagine, even though, okay, we've addressed it already just a little bit here, the demand for gold, the demand for silver is pretty consistent. Yes, they have different growth rates. Yes, silver actually grows a little bit slower, comes out of the ground a little bit slower than gold. It's very close. In the last 50 years, the percentage change, that is how much faster silver grows versus how much faster gold grows, you actually got to give it to silver at that point. So again, 0.45% more percentage points higher for silver in the last 50 years than gold, which it only increased by 0.38 percentage points. Again, extremely close numbers. No one knows exactly how many ounces of silver there are in the world, how many ounces of gold there are in the world. But the trends are pretty solid. They're pretty consistent. And just to make a claim or to sell newsletters or to have this cottage industry of silver buffs and silver bugs saying that silver is just going to explode in price, I find it quite disingenuous. And I think, in fact, the data shows that it's very disingenuous. And I think you can see that here. So that's it for today. This has been the gold and silver all-time supply curves throughout humanity for the last 223 years. Silver has grown at a rate of 1% per year compounded. Gold has grown at a rate of 1.4% per year compounded. Yet in the last 50 years or so, and even more than that, gold compounds at roughly 1.8% per year, and silver compounds at roughly 1.5% per year. Thanks a lot for watching. See you tomorrow.